Hey there, and welcome to today's explainer. If you've ever found yourself just staring at a stock chart, completely paralyzed by the fear of making the wrong move at the wrong time, I promise you, you are absolutely not alone. In today's analysis, we're going to completely demystify how you can build some serious long-term wealth. And the best part, we're going to do it without you having to constantly monitor the stock market or lose sleep over daily price swings. Because let's be real for a second. Are you afraid of buying stocks at the absolute peak? It's a completely universal anxiety. It hits almost every beginner and, frankly, a lot of veteran investors too. We see a market doing really well, we finally gather up the courage to buy in, but then this loud voice in our head goes, wait, what if the whole thing crashes tomorrow? It's an incredibly stressful way to manage your money. And honestly, trying to perfectly time your entry, that's a losing game. It literally keeps millions of people sitting on the sidelines. Well, your fear is totally valid, but today we've got a structured blueprint to get you right past that anxiety entirely. Here's our agenda. First, discipline beats prediction. Second, the Taiwan stock market and stable dividends. Third, US stocks and global growth. And finally, why time is your best friend.
Okay, let's just dive right into our first section, discipline beats prediction.
So let's go ahead and debunk a massive myth right off the bat. You absolutely do not need to be a financial genius, a math whiz, or some sort of fortune teller to succeed in the stock market. You really don't. You just need a system. And the bedrock of that system is dollar cost averaging, or DCA for short. Essentially, DCA is an investment strategy that emphasizes discipline way over prediction. How? Well, you just invest fixed amounts of money on fixed dates. Instead of trying to magically guess when the market has hit rock bottom, you just commit to investing automatically, say $300 on the 5th of every single month, totally ignoring whatever the news headlines are screaming about. It removes the guesswork and all that emotional roller coaster from investing. And this brilliantly illustrates exactly how it works. When the market is booming and hitting record highs, your fixed amount of money naturally buys fewer units. Makes sense, right? But when the market crashes and hits those scary lows, that exact same fixed amount of money suddenly buys way more units. Over the long haul, this mathematical mechanism averages out your costs. It entirely neutralizes that catastrophic risk of dumping your whole life savings into the market right before a massive correction. All right, moving on to Section 2, Taiwan stocks and stable dividends. Now, we're going to apply this DCA strategy to a very familiar space, the local Taiwan market, which is famous globally for its really robust high dividend yields. If you're a high dividend seeker, ETFs like 0056 and 00878 are incredibly popular because they hand you a steady, reliable stream of passive cash flow. On the flip side, if your goal is to track the overall market cap and kind of ride the broad economic wave of the top local enterprises, ETFs like 0050 and 006208 are fantastic options to consider. The big takeaway here? Choose targets with a proven, long-term track record of either capital growth or super stable dividend distributions. But wait, here is the real secret sauce to turbocharging this local strategy. Reinvest your dividends to unlock the magic of compound interest. Guys, this is absolutely vital. When those high-yield local ETFs pay out your dividends, do not just take that cash and blow it on a nice dinner. Use it to automatically buy even more shares of the ETF. That one simple act, that's exactly how you unleash massive exponential growth over a decade or two. So, the crucial point is this. You might be sitting there thinking you need a massive mountain of disposable income to start building a portfolio of dividend-paying assets. You absolutely do not. Get this. Through major local brokers, you can set up an automated DCA plan with as little as 1,000 new Taiwan dollars. The barrier to entry is just incredibly low, meaning pretty much anyone can start building passive income starting today. Let's move to and see how this builds into our third section, taking us across the globe, US stocks, and global growth. Because, look, while local stability and high dividends are awesome, to truly maximize your wealth, we really want to capture the massive accelerating growth of the world's largest financial market. The US market brings some incredible, distinct advantages to the table. First off, it's highly transparent and heavily regulated. Second, it's home to the giant tech companies that literally power our modern lives. We're talking Apple, Microsoft, you name it. By pointing your DCA strategy towards S&P 500 ETFs like VO or IVV, or even broad total market ETFs like VTI, you aren't just betting on America. Because these massive corporations operate all over the globe, you're essentially capturing a huge slice of the entire world's production value. Now, a super common roadblock is thinking, oh, buying US stocks from abroad is just way too complicated or way too expensive. Let's demystify that right now with the concept of sub-brokerage. This is a brilliant, streamlined service offered by your domestic brokers that lets you easily set up automated, low-fee U.S. stock investments. You don't need to fly out and open an overseas bank account or deal with crazy, complex wire transfers. You literally just use your local brokerage app to step onto the global stage. It is that simple. And honestly, perhaps the most exciting feature of these sub-brokerage accounts is something called fractional shares. This means you can own a piece of high-priced tech giants like Amazon without needing an absolute fortune. Think about it. If a single share of a top-tier tech company costs hundreds of dollars, but your DCA budget is only, say, $50 this month, no problem. Fractional trading lets you buy a proportionate slice of that exact share. It completely eliminates the hurdle of crazy high stock prices, ensuring that every single dollar you invest is put to work immediately. Which brings us to our fourth and final section. Time is best friend. So, we've covered the mechanics of averaging out your costs, and we've explored the best ways to tap into both the Taiwan and US markets. But listen to me, none of those mechanics matter without the right psychology. On one hand, you've got human emotion, specifically fear and greed. When we're left to our own devices, our emotions are hands down our worst enemies in investing. We tend to buy when everyone is greedy and prices are sky high, and we panic sell when everyone gets fearful. But on the other hand, we have automation, pure consistency, and discipline. When you set up an automated DCA plan, you're basically building an impenetrable psychological shield. You are completely removing human error from your wealth-building process. Now, what's really interesting about this slide is a truth that completely flips the traditional script. Market crashes are actually the absolute best time to accumulate valuable assets. I know, it sounds crazy. Usually, when the market drops, human emotion is screaming at you to sell everything and run for the hills. But because your automated DCA system doesn't feel fear, it just keeps calmly executing the plan. It recognizes market drops for exactly what they are, the absolute prime opportunity to buy up more valuable assets while they are on sale. Ultimately, the key to successful dollar cost averaging is not timing the market, but staying in the market. It's all about giving time and compound interest the long runway they need to turn short-term volatility into massive long-term wealth. So I want to leave you with a provocative thought today. Are you finally ready to stop obsessing over predicting that perfect entry point, let go of all that daily stress, and start trusting a disciplined process to build your future? Thank you so much for hanging out with me on this explainer, and I absolutely can't wait to explore our next topic with you.